You didn't get robbed at gunpoint. Nobody broke into your bank account. But by the time you retire, you could be missing $64,000, and you gave it away willingly, one invisible percentage point at a time. It's not a scam. It's not fraud. It's sitting inside your own 401 right now, and the U.S. Department of Labor has already done the math on exactly how much it's costing you. Almost half of Americans with a 401 have no idea this number even exists. Here's the Department of Labor's own example, and it's brutal in its simplicity. Someone with $25,000 saved and 35 years until retirement, earning a normal 7% average return, ends up with $227,000 if their plan charges 0.5% in fees. Change nothing else. Just raise that fee to 1.5%, a single percentage point most people would call small, and that same person retires with only $163,000. That's a $64,000 difference. Not from a bad investment, not from a market crash. From a fee so small it looks like a rounding error on a statement nobody reads. The Department of Labor called that a 28% reduction in retirement savings. From 1 percentage point. This isn't hidden because someone is trying to trick you. It's hidden because of how retirement plans were built. 401 fees don't show up as a line item charge, like a subscription. They're deducted directly from your investment returns, quietly, before you ever see the number. Your account just grows a little slower every single year. And slower growth looks identical to normal market performance. There's no red flag, no email, no warning label. By the time most people notice, they're not looking at one bad year. They're looking at 3 decades of it, compounded. Here's the part that makes this so dangerous. It's not really about the fee. It's about what the fee stops from happening. Every dollar taken as a fee is a dollar that no longer sits in the market earning more money. And that lost dollar doesn't just cost you once, it costs you every single year it would have kept compounding. Picture a snowball rolling downhill. A 1% fee doesn't just shave a little snow off the top. It shrinks the snowball just enough that everything it would have picked up on the way down never gets picked up at all. That's why a tiny 1% difference doesn't cost 1% of your retirement. Over 35 years, it can cost more than a quarter of it. A recent survey found that 71% of people with a 401 could not say what their plan actually charges them in fees. Not the exact number, most couldn't even estimate it. Nearly half assumed they were paying less than 0.5%. In reality, only about 1 in 10 plans nationwide actually charge that little. Most people are paying more than they think, and have been for years, without ever checking. Picture 2 coworkers, same job, same salary, same contributions. One happens to be in a plan charging 0.5%, the other in a plan charging 1.5%. They'll retire with the exact same effort and completely different outcomes, and neither of them chose that fee. Their employer picked the plan. They just showed up, and it happened to them. Multiply this across the country and the number stops being personal and starts being staggering. Roughly 87 million American workers have access to a 401-style plan. If even a meaningful share of them are sitting in higher fee plans without realizing it, we're not talking about thousands of dollars lost. We're talking about a slow, invisible drain on the retirement savings of an entire generation of workers, one nobody is required to warn them about in plain language. This is why financial advisors keep saying the same thing. The fee you don't check is often more expensive than the investment mistake you're afraid of making. Here's what catches people off guard the most. Checking this number takes about 5 minutes, and almost nobody does it. Every 401 plan is legally required to disclose its fees. That disclosure is usually sitting in a document you were emailed once, years ago, and never opened. It's not buried by design. It's buried by boredom, and that boredom is worth tens of thousands of dollars to the people who don't go find it. This isn't a call to panic or pull your money out of the market. Fees are a normal part of investing, and some cost is expected. But there's a difference between a reasonable fee and one quietly eating a quarter of your retirement. Pull up your plan's fee disclosure. Most providers post it online under fee disclosure or plan documents. Look for the total expense ratio, not just the fund name. If your plan runs meaningfully above 1% and lower-cost fund options exist inside it, that's worth a conversation with HR or a financial advisor, not a shrug. And if you've changed jobs and left old 401s behind, check those too. Forgotten accounts are often the ones charging the most, because nobody's watching them at all. You didn't lose that $64,000 in the market. You lost it in the fine print. The market did its job. Compounding did its job. The only thing standing between you and that money was one document you never opened. 5 minutes today. Tens of thousands of dollars over a lifetime. That's the trade nobody told you that you were making. If you want more documentaries that explain what's really happening to your money, subscribe to Capital Invests.